Welcome to Sectors Up Close. I'm Angeline Ong. Our focus today is on investing in robotics and autonomous technology. And our guest is Richard Lightbound, CEO for EMEA and Asia at fund manager ROBO Global. One megatrend that many thematic investors seem to want a piece of is the adoption of AI and robotics. The technology is used in everything from self-driving cars to medical devices. One off-cited forecast by Grandview Research estimates the global market size for AI alone is expected to grow from $40 billion in 2019 to $733 billion by 2027 for a compound annual growth rate of 42%. But cashing in on the trend can be tricky. While there are many indices and ETFs that claim to track automation and robotics, they often have very different investment styles. This graphic here compares three, including their year-on-year performances and three top holdings. The second of the three is managed by Cathie Wood's ARK Invest, and the last one is managed by the company of our next guest, that is Richard Lightbound of ROBO Global. Richard, thank you so much for joining us. Now, it sounds very trendy to invest in AI and robotics, but most stocks have had a huge run-up in the past year. Is it not too late?
Short answer is no. And, yes, we would agree that there has been a huge run-up in terms of recent performance. But if you look back further as well, we've had our strategy live for 7 years. If you look at the past 5 years annualized, we've got well over 20% growth sitting there.
Now, not all investments are the same, of course. How would you pick the winners? Why not just buy chip makers, for example, for the average investor?
Look, it's a great question. I think if you just step back, I think robotics and automation for investors it's a critical theme to make sure you have exposure to. Don't feel that you might have exposure to this just because you're holding some broad tech indices. It's not about just broad technology plays here. This is a much different opportunity. This is about a set of technologies, things like machine vision, natural language processing, as you say, chip companies, computing, processing power. So it's about capturing enabling technologies like that in a strategy. It's also about identifying where we're seeing robots successfully deployed. So we're all familiar with factory robots, what's happening in warehouses. But you need to look inside hospitals, you need to look on farms, you can see this technology entering our homes, driving our cars. So we think investors really, to properly get exposure to the theme, need broad, diversified exposure. Don't take concentrated bets. It's way too early to try and time this opportunity. But also don't miss it. It is early days. Adoption rates are still relatively low. But the deployment here of where this technology is going to be used is absolutely vast.
So if investors did not want a concentrated portfolio in this space, what pitfalls would you advise them to avoid?
Well, I think really, as we were saying earlier, don't take concentrated bets. Take a broad, diversified view of the opportunity. I think look beyond just normal tech type strategies that you see in the market. I think also recognize that, it's great that there are a lot of different options in terms of how to invest into something like robotics and automation, but just be aware that the different strategies, as you said earlier, Angeline, have different styles. So you'll see very different types of companies in the strategies. We think it's very important to take a strategy that has an international feel to it. There are companies all around the globe involved in robotics and automation. We think it's important to have a tilt towards small and mid-cap companies. And I think what's great about this opportunity is when you're not taking early tech bets on companies. These are proven, well-established businesses, many of it have been around for 20 or 30 years. But it's only when you put that robotics and automation lens on what they do, take a forward-looking view, that you end up with this really interesting, diverse portfolio.
Richard, thank you for your take on this very interesting sector. That was Richard Lightbound, CEO for EMEA and Asia at ROBO Global. Now, before I go, here are some of the top stories in the sector. IBM has unveiled what it says is the world's first 2-nanometer chip-making technology. It would be as much as 45% faster than the current 7nm chips used in today's laptops and smartphones, and as much as 75% more power efficient. IBM no longer makes chips. Instead, it outsources production to Samsung Electronics and has joint development deals with Samsung and Intel. The new technology will likely take several years to come to market. Self-driving sensor startup Aeva says its sensor can detect other vehicles from beyond 500 meters and pedestrians from 350. Aeva was founded by former Apple engineers and has a deal with automotive suppliers such as Japan's Denso for mass production of its sensors. At 500 meters, the range of Aeva's new sensor would be around 200 meters longer than current rivals. And finally, Dutch police have welcomed a new member to their Special Forces team, a four-legged robot dog named Spot. The robot was used for the first time in March in what police say will be its primary function for now, entering drugs labs before humans do. Spot uses cameras and other sensors and is useful because of its ability to walk through doorways and clear minor obstacles. And that's your roundup of the automation and robotics sector. I'm Angeline Ong, and this is Reuters.